The world's biggest tax haven isn't a tropical island. It's the United States. $32 trillion. That's how much private wealth is hidden in offshore accounts around the world. From Caribbean islands with more shell companies than people, to a European country that kept secrets for 300 years, these are the 10 countries where billionaires hide their money and exactly how they get away with it. Number 10. Singapore. Singapore went from a fishing village to Asia's financial capital in less than 50 years. Today, it manages over $4 trillion in assets, and its wealth management industry is growing faster than anywhere else on the planet. The appeal is straightforward. No capital gains tax, no tax on dividends, no inheritance tax. Corporate tax is capped at 17%, but with incentives, some companies pay as little as 5%. For billionaires, the variable capital company structure, introduced in 2020, allows pooled investments with zero disclosure to the public. Singapore's financial secrecy index score is 65 out of 100, ranking it the third most secretive financial center in the world behind the US and Switzerland. Over 200 single-family offices have set up here since 2020, managing billions for ultra-high net worth individuals from China, Indonesia, and India. The Singapore model works because it offers both secrecy and stability. It's one of the least corrupt countries on earth, with AAA credit ratings and the rule of law. Rich people don't just want low taxes. They want safety. Google co-founder Sergey Brin, hedge fund billionaire Ray Dalio, and Dyson founder James Dyson all have significant financial operations in Singapore. The city-state has made it very clear, bring your money, and we'll protect it. Number 9. Luxembourg. Luxembourg is smaller than Rhode Island, with a population of just 660,000. Yet it holds $5.6 trillion in investment fund assets, making it the second largest investment fund center on Earth after the United States. The secret is the SOPAR, a financial holding company that pays zero tax on dividends and capital gains from qualifying subsidiaries. Amazon, IKEA, and FedEx all route profits through Luxembourg entities. In 2014, the LuxLeaks scandal revealed that over 340 multinational companies had secret tax deals with Luxembourg, some paying effective tax rates below 1%. Luxembourg's corporate tax rate is officially 24.94%, but through the participation exemption and intellectual property box regimes, multinational corporations can reduce their effective rate to nearly zero. The country processes more cross-border fund distributions than any other nation in Europe. The EU forced Luxembourg to close some loopholes after LuxLeaks, but the country adapted. It now markets itself as a transparent, compliant financial center, while still offering structures that legally minimize tax to near zero. Luxembourg's prime minister at the time of LuxLeaks was Jean-Claude Juncker, who later became president of the European Commission, the very body responsible for cracking down on tax avoidance. The fox guarding the henhouse. Number 8. Hong Kong. Hong Kong operates on a territorial tax system. If your income is earned outside Hong Kong, you pay zero tax on it. Zero. This makes it the perfect conduit for routing money through Asia without paying a dollar in tax on offshore profits. The city manages over $3 trillion in assets and is home to more than 9,000 ultra-high net worth individuals. There's no capital gains tax, no withholding tax on dividends, and no value-added tax. The standard corporate tax rate is just 16.5%, but only on profits sourced within Hong Kong. The Financial Secrecy Index ranks Hong Kong fourth globally with a secrecy score of 66. The city's trust structures and limited partnership funds allow wealth to be held with minimal disclosure. Despite China's increasing influence, Hong Kong's financial infrastructure remains largely autonomous under the one country, two systems framework. Since 2020, some ultra-wealthy families have diversified out of Hong Kong into Singapore as a hedge against political uncertainty. But for pure tax efficiency on Asian operations, Hong Kong remains unmatched. The real power of Hong Kong isn't just low taxes. It's access. From Hong Kong, you can move money into mainland China, Southeast Asia, or global markets with minimal friction. It's not a place to hide money. It's a place to move it. Number 7. Jersey. Jersey is a British Crown dependency in the English Channel with a population of about 103,000 people. It manages over $1.5 trillion in financial assets. That's roughly $14.5 million per resident. The island charges zero corporate tax on most financial services companies. There's no capital gains tax, no inheritance tax, and no value-added tax. Jersey trusts are the gold standard for dynastic wealth protection, used by families to pass fortunes across generations without triggering tax events. The Financial Secrecy Index ranks Jersey 9th globally with a secrecy score of 65. The island is self-governing but relies on the United Kingdom for defense and foreign affairs. This creates a unique dynamic. Jersey can set its own tax policy while benefiting from Britain's legal infrastructure and international credibility. Jersey is technically not part of the UK or the EU. This limbo status is the entire point. It gets British legal protections without being subject to British or European tax rules. After the Panama Papers, Jersey's government insisted it was transparent and cooperative. But a 2017 investigation by the BBC found that Jersey trusts were used to conceal ownership of London real estate worth hundreds of millions of pounds. The island's financial industry employs nearly 25% of its working population. Secrecy isn't just a policy in Jersey, it's the economy. Number 6. Panama. In 2016, 11.5 million documents leaked from a Panamanian law firm called Mossack Fonseca. The Panama Papers exposed how 140 politicians, dozens of billionaires, and thousands of wealthy individuals used Panamanian shell companies to hide money, evade taxes, and launder proceeds. Panama's corporate registry allows bearer shares, which means ownership of a company can be transferred with a physical piece of paper, no registration required. Combined with strict banking secrecy laws and zero tax on offshore income, Panama became the go-to jurisdiction for anyone who wanted a company that couldn't be traced back to them. At its peak, Mossack Fonseca had created over 214,000 shell companies across 21 jurisdictions. Panama alone had more than 350,000 registered international business companies. That's more companies than people in some neighborhoods. After the Panama Papers, the country made reforms. They eliminated bearer shares in 2015 and started sharing some tax information. But enforcement remains weak, and new structures have replaced the old ones. The fallout was enormous. Iceland's prime minister resigned. Pakistan's prime minister was removed from office. Investigations launched in 82 countries. Over $1.2 billion in additional taxes were recovered worldwide. But Panama's financial industry survived. It adapted. The shell companies changed names, the law firms reorganized, and the money kept flowing. Because demand for secrecy doesn't disappear when you expose it. Number 5. British Virgin Islands. The British Virgin Islands has a population of about 30,000 people and over 400,000 active companies. That's 13 companies for every man, woman, and child on the island. And most of those companies have no employees, no offices, and no operations. They exist for one purpose: to own things anonymously. BVI companies were featured in over half of the 214,000 entities revealed in the Panama Papers. The territory charges zero corporate tax, zero income tax, zero capital gains tax, and zero withholding tax. A BVI company can be set up in 24 hours for under $1,000. The structure is elegant in its simplicity. A billionaire creates a BVI company to hold real estate in London, a yacht in Monaco, and investments in New York. The BVI company is owned by a trust in Jersey, administered by a law firm in Switzerland. 5 layers of anonymity, all perfectly legal. The BVI survives on financial services. Over 60% of the territory's government revenue comes from company registration fees. If they crack down on shell companies, the economy would collapse. Despite international pressure, the BVI introduced a public register of beneficial ownership only in 2023, and access remains restricted to authorities. The average person still cannot see who owns a BVI company. For billionaires, the BVI isn't about avoiding tax. It's about making sure nobody knows what you own. Number 4. Cayman Islands. The Cayman Islands has no income tax, no corporate tax, no capital gains tax, no payroll tax, and no withholding tax. There has never been a direct tax in the history of the Cayman Islands. Not once. In over 500 years. This 264 square kilometer territory in the Caribbean is home to over 100,000 registered companies, including more than 10,000 hedge funds and 200 banks. It holds approximately $2 trillion in deposits. More money flows through the Cayman Islands per year than through most G7 nations. The Cayman structure of choice is the segregated portfolio company, which allows a single entity to hold multiple investment portfolios, each ring-fenced from the others. If one portfolio collapses, the others are untouched. It's corporate liability protection taken to an extreme. The Cayman Islands isn't technically illegal, and it's not a secret. Apple, Alphabet, Facebook's parent Meta, and thousands of publicly traded companies all have Cayman entities listed in their SEC filings. It's legal. That's the point. The population of the Cayman Islands is about 68,000. The number of registered companies exceeds that by a factor of 1.5. The island has more registered hedge funds than restaurants. The Cayman model proves something uncomfortable. You don't need to hide money in the shadows when you can hide it in plain sight, with a good lawyer and a mailbox in Georgetown. Number 3. Dubai, United Arab Emirates. Dubai was a fishing and pearl diving town 50 years ago. Today, it's the world's fastest-growing wealth hub, and it's attracting billionaires at a rate that makes Singapore and Switzerland nervous. The UAE charges zero personal income tax, zero capital gains tax, and until 2023, zero corporate tax. The new 9% corporate tax, introduced in June 2023, applies only to profits above 375,000 dirhams, roughly $102,000. Free zones like the Dubai International Financial Center are exempt entirely. But the real draw is the Golden Visa. Invest 2 million dirhams, about $545,000, in UAE property, and you get a 10-year residency visa. Over 150,000 Golden Visas have been issued since the program launched in 2019. Russian oligarchs fleeing sanctions, Indian tech billionaires, and European crypto entrepreneurs have all landed in Dubai. Dubai's no-questions-asked reputation is changing. The UAE was placed on the Financial Action Task Force Grey List in 2022 and removed in 2024 after implementing anti-money laundering reforms. But enforcement is still developing. The city added over 4,500 millionaires in 2024 alone, the highest net inflow of any city in the world. Luxury real estate prices jumped 20%. Dubai's strategy is simple. Offer zero taxes, world-class infrastructure, geographic centrality between Europe and Asia, and a lifestyle that billionaires can't resist. The result is a city that's becoming the world's safe deposit box. Number 2. Switzerland. For nearly 300 years, Swiss banking secrecy was absolute. A 1934 law made it a criminal offense for a Swiss banker to reveal a client's identity, even to foreign governments. This single law turned Switzerland into the world's most trusted vault for private wealth. At its peak, Swiss banks held an estimated $7.9 trillion in cross-border assets, roughly one-third of all offshore wealth worldwide. The country's banking sector manages approximately $2.4 trillion in foreign-owned assets today, even after decades of international pressure to reform. Switzerland's Financial Secrecy Index score is 70 out of 100, ranking it the second most secretive financial center globally. The country pioneered the numbered bank account, a system where a client's name is known only to senior bank officers, not to the staff handling day-to-day transactions. Switzerland has signed automatic exchange of information agreements with over 100 countries since 2018. The era of pure bank secrecy is technically over, but Swiss trusts, foundations, and Freeport storage facilities still offer layers of privacy that most jurisdictions can't match. UBS and Credit Suisse, now merged, were fined billions for helping U.S. citizens evade taxes. In 2009, UBS paid $780 million and handed over 4,450 client names to the IRS. But the Swiss banking industry didn't collapse. It reinvented itself as a wealth management hub focused on legal tax optimization. The secrecy didn't disappear. It just got better lawyers. Number 1. United States. Number 1 isn't Switzerland. It isn't the Cayman Islands. It isn't even a tropical island. The world's biggest enabler of financial secrecy is the United States of America. The Financial Secrecy Index ranks the U.S. number 1 globally with a secrecy score of 67. South Dakota, Nevada, and Delaware allow the creation of anonymous trusts and shell companies with minimal disclosure. South Dakota alone holds over $600 billion in trust assets, up from $57 billion in 2011. That's a 10x increase in just over a decade. The U.S. has no federal requirement to disclose the beneficial owners of trusts. A billionaire from any country can park money in a South Dakota dynasty trust that lasts forever, is shielded from creditors, and doesn't report to any foreign government. The Corporate Transparency Act, passed in 2021, was supposed to fix this, but implementation has been delayed and legal challenges continue. Here's the irony. The U.S. aggressively pursues Americans who hide money abroad through FATCA, the Foreign Account Tax Compliance Act, but it refuses to reciprocally share information about foreigners hiding money inside the U.S. Over 100 countries share data with the U.S. The U.S. shares with almost none of them. Meanwhile, Delaware has more registered companies than people. Wyoming lets you create an LLC with 0 state tax and 0 public disclosure in under 10 minutes online. The Pandora Papers revealed that South Dakota trusts held assets for clients from 41 countries, including ruling families and oligarchs. The United States tells the world to crack down on tax havens. Then it opens the back door and says, "Bring it here." The world's biggest tax haven isn't on a beach. It's in a strip mall in Sioux Falls, South Dakota. From 300 years of Swiss banking secrecy to a strip mall in South Dakota, these 10 countries prove that the world's biggest tax havens aren't always where you think. Which country surprised you most? Tell us in the comments, and hit subscribe for new top 10 countdowns every week.